Hi, this is a short video about the ASR assignment for the summer 2018-2019 offering of ASR. Okay, so here's the assignment. Hopefully a lot of you have done most of the work for it. What I want to do is I want to talk you through the main requirements of the assignment just to make sure we're all on target roughly. Okay, so Part A. In fact, since we're talking about Shopping Centres Australia SCP, the first thing you should probably do is download the financial statements for SCP. So if you go to UTS Library website and find Data Analysis Premium, click on the online resource, and we're going to find SCP, Shopping Centres Australasia Property Group. And down here on the left, under Annual Reports, please just grab the latest annual report. I mean, you could grab an earlier one, but the latest one's probably going to be more useful. And just save that to your PC somewhere. Okay. Now, once you've saved that, we can actually use that to give us some guidance on some parts of the assignment. So, firstly, we've referenced to SCP, identify and summarize the accounting policies relating to investment properties and how these are dictated by regulation. Now, what I'd basically do, and I think I've made this comment to some of you, is first up, I would basically go to the notes to the accounts. So for many companies, so this is the annual report, for many companies, note 1 to the financial statements. So I'm looking for the financial statements first. Okay, so once we find the financial statements, these are on about page 71 or thereabouts. We've got the consolidated statement of profit or loss. We've got, it's continued there. We've got the balance sheet, and we've got statement of changes in equity, and we've got cash flow statement. Now, what you'll generally find for most companies is that note 1 will list the main accounting policies they apply. In the case of SCP, this is actually note 2. Note 1 gives you a bit of corporate information. So if you look at the significant accounting policies, they will describe all accounting policies that have a material impact on the things that they record. So as you flick through, you'd see down here you've got K, and they basically tell you what they're doing with their accounting policies. Now, so part of your description, part of your answering that question can basically draw on that. However, in the question, we're also told to address the issue of how these are dictated by regulation. So for this, you'll need to have a look at the relevant accounting standards and see how much of what they're doing here and how much of what they seem to be doing on the financial statements themselves comes from the accounting standards. So if you haven't looked at them yet or recently, the accounting standards, you want to go to aasb.gov.au, and down here we have table of standards. Okay, and I guess if you want to take a pot shot, just look for investment. Oh, and gee, look, 140, there's a standard on investment property. Now, that's obviously a standard that you want to look at. However, there may be other standards that are relevant. Okay, if we're measuring things at fair value, maybe you want to see, oh, gee, is there a standard on that? So have a look through those standards and see if any of those are relevant to measuring investment property. And actually, I think if you look at the investment property standard itself, so if you click inside it, you'll actually see that it does refer to other standards there, especially in relation to how you measure fair value. Okay, so that is basically Part A. Now let's look at Part B. Part B is basically saying, again, with reference to SCP, let's talk about the flexibility that management has. Now, one thing that you should have picked up from this subject is that because of the way accounting works, because it's not like a physical science, there is judgment, there is ambiguity, and there is choice in many places in accounting reporting. Okay, so basically what I'm wanting you to do in Part B is try to identify how much judgment comes into the reporting process for investment properties and where it comes in. So for example, is there any judgment involved in establishing fair value. And if you remember the fair value model that we covered in lectures, the fair value measurement, where there are basically 3 levels of establishing a fair value, that will give you some guidance, and it will make it clear where judgment comes in. You've then got to go back to SCP and ask the question, well, which of the levels are they measuring fair value at? Are they using any judgment? And to be honest, SCP might not give you enough information for that. You might not be able to answer it definitively. So you would then say, well, here's what they might be doing. So speculation in Part B is reasonable. Okay, and who decides whether you've got a level 1 or a level 2 source of evidence, or a level 3? Management. Well, that's judgment itself. Okay, so let's move on to section 3. In section 3, I'm asking you, with reference to SCP, to explain the potential impacts of changes in the retail industry on financial reports. So what are we basically asking you to do here? Well, firstly, identify what industry changes there are, right? And as you see at the beginning of the assignment, I talked a little bit about how retail outlets with physical presence have been having problems. Perhaps you can find some other evidence that tells us what the impact is on shopping centres, on investment properties, of all the changes that are currently going on in the retail industry. The move towards online, the problem that local outfits have with the ones that have physical presence. Okay, so firstly, identify the industry changes. Now, you could speculate, I guess, if you want to compare against investment properties, you could generally talk about, at least a little bit, about the impact of these changes in the retail industry on other types of businesses. It's not directly relevant, but it might give you a mode of comparison with investment properties, but it might also tell you a little bit more about what's happening to those entities that hold investment properties. Okay, but the key in this part of the question is basically to focus on the accounting impacts for SCP. So to make it a little bit more obvious, we're basically asking you the question, which numbers on their financial statements are likely to change? Okay, and if you consider it useful, have a look at those financial statements that we've got for SCP. We've got an income statement, we've got a balance sheet. Which of those numbers are likely to change? And if so, why? Okay, so that's part C. Now let's look at part D. For part D, we're talking about the potential economic consequences of these changes in the retail industry. And I basically say this should be answered using the accounting theory related to the material we covered back in week 0. Now, I chatted with somebody the other day and they said, well, look, I'm okay with the numbers, but I'm not sure how I apply the accounting theory to this, because the accounting theory seems quite, at a high level. It's hard to apply it specifically. Well, if you go back to what we talked about when we started talking about accounting theory, and a topic that has come through the subject throughout, there are basically those 2 key agency relationships. There's the agency relationship between the firm and lenders, so the debt agency relationship, and the agency relationship between the firm on behalf of the shareholders and the managers. That's basically the executive pay part of it. So I guess in order to answer this, you might start by saying, okay, what changes are these changes in the retail industry? What changes are these changes likely to cause on the financial statements? We've already answered that in C. And what impact is this likely to have on debt contracts? Now, you remember the accounting numbers that debt contracts use to manage risk. For example, you might have a focus on the debt asset ratio. If that ratio gets too high, you might need to renegotiate your debt. Now, you're welcome to have a look through SCP's financials and see whether they tell you anything about debt contracts. They might or they might not. If they don't, then you can speculate. Okay, let's assume these guys have got contracts. These numbers will change. And so these numbers on the balance sheet, income statement will change, and that will have an impact on the debt asset ratio. And this might cause the following problems with their liabilities. Okay, so that's the sort of thing I'd like you to probably think about for the debt relationship. For the management compensation relationship, I guess probably one of the key things you want to do, I mean, you've already looked in C at how the numbers change. In D, it might be useful to see how are management of SCP being rewarded. And if you actually search through the reports, there should be, like here's how they account for reporting, but elsewhere, there's going to be some information about compensation. So for example, these guys are getting shares based on compensation, based on how the company performs, or rather part of their compensation depends on how it performs. Here, at note 20, we've got some information about how key management personnel are being compensated. Okay, so some of it's short-term benefits, that's likely to be cash. Post-employment benefits, that's probably pension plans. But look, they're getting a chunk of shares, share-based payment, and I'm not sure what the long-term benefits are. So there's a little bit more disclosure in the next note about share-based payments. So coming back to the assignment, what are the implications for managers' take-home pay of these changes in the retail industry, given that in C you've already looked at changes that those changes in the industry will make on the financial statements? Okay, so we know that there is an impact on the financial statements. We know those impacts affect the debt relationship and the management compensation relationship. Okay, so that sort of answers part of D. But if you want to take a more nuanced, deeper approach to this, you might then speculate, okay, here are the changes that here are the changes that the changes in the retail industry are making. How would management respond to those? What would you expect management to do? Would they change the way they run the business? Would they change their accounting? Okay, and so that's an extended, deeper version of a consideration of the economic consequences. Okay, I hope this has been of some use. So, feel free to look at other resources that tell you about what's going on in the industry. I strongly recommend that you have a look at the financial statements. It's going to be really hard to answer this without looking at the financial statements of SCP. And I would assume most of you have looked at that already. So you get that off the Data Analysis Premium service from UTS Library. And of course, you will need to be looking at the accounting standards, so asb.gov.au. If you have any further questions, please feel free to ask them on UTS Online, or I'm around, so just come and have a chat to me after the class or any of the other days this week or next week. If you're having problems delivering the assignment on time, I'm not generally going to issue extensions. I really expect you to plan your time well, but if there are some problems, let me know. Okay, hopefully that's been of some use. See you in class.